Broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, welcome to today's Dynamic Business and CreditorWatch webinar on credit management. We're just going to give it another 30 seconds or so just to wait for a few other listeners to tune in. Okay, and we're a go. Once again, good afternoon everyone, and welcome to today's webinar on credit management. It's brought to you by Credit Reporting Bureau CreditorWatch and Dynamic Business, a publication that's kept businesses informed for more than 20 years. I'm James Harkness, your host and the editor of Dynamic Business, and I'm joined today by Patrick Coghlan, who is the Managing Director of CreditorWatch. Now, due to the huge financial burden of bad debtors, and let's face it, they can cripple a business's cash flow, credit management is a topic that continues to resonate with our subscribers. Now, recently, the government announced draft legislation empowering the ATO to report a business's overdue tax debts to credit reporting bureaus. Now, that news has been described by CreditorWatch as a huge win for SMEs. People are eager to know exactly how they can lay the foundations for better credit management, and so safeguard their business's bottom line against late and non-payers. Well, you're in luck. Today, Patrick will provide actionable insights around determining the creditworthiness of your customers, establishing a prompt payment credit policy, and effectively managing high-risk customers. Over to you, Patrick.
Thank you, James. Thanks everyone for joining us. As James said, my name is Patrick and I'm the MD at CreditorWatch. I've been here from day one, so I've got a fairly good understanding of the business, how it works, the products. So we'll get into a bit of a demonstration later. It's not a sales job, obviously. We really want to sort of talk about the basics around credit management. It's something that we get asked a lot of ourselves, and it's something that Dynamic Business subscribers have been asking of James and the team as well. So hopefully we can all get a little bit out of this today. So before we get started, questions are welcome. There's a question box that's available within the GoToWebinar pop-up box. Feel free to write the question in there. I'll try to get to questions at the end. If not, we'll respond to them generally within 24 hours, particularly if it's a little bit more complicated or complex. Also, we're recording the webinar, so we'll provide a recording of this afterwards and also send through some slides, these slides that I'm showing too. Again, that'll come through in the next sort of 24 hours. That way you can pass it on to colleagues, have a little bit of a reference, or save it for a later date. So a quick poll question I wanted to run. I've got a few of these lined up, just 3, but it just starts to give me a better understanding of exactly, what type of listeners we've got. It helps me determine what I'm going to ask and what I'm going to show ultimately. So the first one we've got here is, do you have a documented credit management process in place? So I've given people an out here. I've got yes, I've got no, and I've got sort of. So feel free to sit on the fence with the sort of if you want, and we'll go from there. So just waiting on a couple more people to vote, and then I'll close it up. We'll have a quick look at the responses as well. Cool. So none of you have a documented credit management process in place, which is fine. That's extremely common. 50% of you have said no adamantly, and then there's a 50% of you are fence sitters there. So hopefully this presentation will start to get some of you at least thinking about a credit management process, and not necessarily documenting it internally, but at least having it in mind and passing that on to staff if you do have staff in that accounts receivable function within your business. So quick look at the agenda. So I'll just touch on who CreditorWatch are, just to give everyone a better understanding of who we are, what we do, where we've been. The next thing I will do as well, sorry about that, is run through the 6 REs of credit management. These have been developed by CreditorWatch over the last probably 5 years and refined, and it's something that we share with our new members and push out through our social media pages, allow people to download, that sort of thing. It's really the basics of credit management that every organization should be following, regardless of how big or small you are. We'll also do a CreditorWatch demo, so you can see exactly how to put those tools into place. And we'll have a Q&A. So just to keep it going, let's talk a little bit about CreditorWatch. So who are we exactly? We're Australia's leading credit reporting bureau. We've got over 50,000 customers across Australia. That is made up of small businesses, large businesses, public companies, basically everyone across the business size spectrum and across all industries as well. We've got a number of products that we provide. The main ones that I'll sort of touch on and you can use in that Credit Management 101 space is credit reports, finding out exactly who you're dealing with and are they good or bad, monitoring and alerts. So that's getting CreditorWatch to keep an eye on all your debtors or your customers, and we'll send you email alerts when important changes take place. Debt collection tools, which is ultimately a fundamental part of credit management. And unfortunately, sometimes you have to be a little bit more aggressive in your collection when people are either avoiding your calls, emails, etc., and owe you money. The last one is Apply Easy, which is an online credit application. Separate product, but for those businesses out there who run, who might be getting sort of 10 or more credit applications, new account requests a month, this is basically a product that will replicate your current paper-based credit application form, make it available online, so these new customers can apply online, and we automate that credit onboarding piece for you. In terms of SMEs, now I talk about specifically SMEs here because the majority of Dynamic Business subscribers and visitors are smaller businesses. CreditorWatch is best described as a virtual accounts receivable manager. So I know a lot of you won't have a dedicated accounts receivable manager or a credit manager in your organization. This is where CreditorWatch can really fill the void. And for those that do have a dedicated resource in that space, that's perfect. CreditorWatch still acts as a fantastic tool for them to use as well. And the last one we have here is sources of data. So, it's a big question that we always get asked. So CreditorWatch plugs into and accesses data from a wide variety of sources, both government, public, private data sources. So we've got ASIC, the Australian Taxation Office, the Australian Business Register, courts from around Australia. Debt collectors will provide data, which is basically flagging companies that they're chasing for debt collection. So it's always good to know, if one of your customers or if a new customer comes to you, are they already being chased for debt collectors at the moment? Of course, CreditorWatch customers submit a lot of data as well in the form of payment defaults and receivables information. Plus, there's plenty of other sources of data out there that we're basically grabbing as much as we can, aggregating it into a single credit report for you to be able to understand, are they good or bad or neutral? So another poll question, do you currently run credit reports? I haven't given anyone an out here. It's a pretty simple yes or no. Again, this will just tailor exactly how I present CreditorWatch later on. All right, almost there. Everyone has voted. Thank you for that. So having a look there, 67% say no, 33% yes. So nice round numbers there. That's fine. Be able to give you, even the people who do run them, it's always good to show you potentially an alternative if you're not already using CreditorWatch. So let's get into the 6 REs of credit management. Pretty straightforward here. Research, remind, review, react, recover, and register. Okay, we've provided a link to download an infographic. So we really encourage you, once we send these slides through, to download that infographic, particularly if you're in that credit management or accounts receivable role. Get it up on your desk or somewhere that it's visible, so that you continue to do the right thing in terms of your credit management role. It really does often come down to the squeaky wheel gets the grease. So getting into that routine, doing the same thing over and over, refining it, working out what works best for your business, and continuing to optimize it is really important. But this kind of ensures that you're not forgetting any of the basics, and really will assist with ensuring that you get paid. Not just get paid, it's get paid hopefully on time. A lot of business owners and managers out there will be quite reactive rather than proactive when it comes to their collection policies. They'll often wait to 60, 90 days overdue, and go, oh, I haven't been paid that invoice yet. Remember, a sale isn't a sale until the money hits your bank account. So if you're doing a job, providing goods or services, and you're waiting 90 plus days for that, you pretend you're going to be eating into your profit margin significantly. You're going to be affecting your cash flow as well, which is really important. And particularly in today's day and age, cash flow is definitely not something that you want to be messing around with. So if you can start to be a little bit more proactive, you'll find that you'll reduce the days it takes to get paid down significantly, which is going to have a huge knock-on effect within your business as well. So the first one we've got here is research. So whenever a new customer comes to you, or even an existing one that you potentially haven't dealt with for a while or haven't looked at closely in a while, you want to do your research. So start by running a credit report on them. Have a look at their credit history. Do they have any important information, what we call adverse information in the credit reporting world, that says they don't pay their bills, they're a slow payer, there's a default, they're regularly paying 90 plus days overdue, that sort of thing. But even more basic than that is, who is this company or this business that has come to you? You might know them as Mick's Butcher, but who is Mick's Butcher? Who's the owner? Do they actually exist? Do they have an ABN? Do they have an ACN? Who are the directors? What are their registered addresses? That sort of thing. If you ever need to escalate down the path and take them to court, you actually need to be able to identify them from a legal point of view, ABN, ACN, registered business name, legal name, that sort of thing. Who are the directors' addresses? So it's really important that credit report gets run, even if it's just basic, to see exactly who it is behind the business and that they exist as a business. It'll give you not just peace of mind, but it will assist you in avoiding dodgy debtors that exist out there, and ultimately assist in your collection down the track, particularly if you have to go legal. So the second one is remind. So following up with timely reminders will encourage prompt payment. So try emailing a reminder the day it is due, send a statement at 7 days, and follow this up with a phone call at 14 days. Now, these are just examples, but what's really important is to get into a good routine so that you're regularly doing the same thing for all your customers. That way, you actually train your customers to pay their bills either on time or at the same time. You're not just following them up at 60 or 90 days overdue. you're constantly reminding them in a nice, friendly way, hey, this invoice is now due. It'd be great if this could get paid. As it gets past that sort of 30 days, that's when you can start to be a little bit more persistent and aggressive. But really what you'll find is the majority of people do the right thing, particularly if you remind them. If you don't remind them, it is very easy for them not to pay that bill because it's great for them to have that cash in their own bank account rather than paying you. So retraining your customers, if you're not very diligent at the moment, takes some time. But at the end of the day, you've done the work or you've provided the goods, so they ultimately owe you the money. You shouldn't be afraid of asking for money. No one loses a customer for asking to get paid. And if you do, you probably shouldn't be dealing with that customer in the first place. So don't be afraid to say no to customers. With the invoice that you are providing, make sure that's provided as soon as possible, either on delivery or ahead of delivery, and ensure all the details are correct. Now, you should be pulling a lot of those details from that initial credit report that you ran, pulling things like the ABN, ACN, using the correct business name, and putting on, potentially the director if that's who you're dealing with as the customer. Make it nice and clear as well how you take payment. Do you take credit card, EFT, check, etc.? Put the dates on there and ensure that it's really clear exactly when that debt is due. Next one is review. So a customer's credit history won't always stay the same. You can receive alerts and be notified about important changes simply by setting up customer monitoring and reviewing their credit profile on a regular basis. So you may have done a credit check on this new customer. They've been paying you fine for 6 months, and then all of a sudden they go into administration, or they have a big court action against them which threatens to pull them under, or they might have a number of payment defaults, so they stop paying all their other suppliers. If you're not monitoring them with a credit bureau like CreditorWatch, the only way you're going to find that out is by keeping an eye on all the courts that are out there across Australia, checking into ASIC and the Australian Business Register on a regular basis, and ultimately the next step is probably calling their other suppliers, which is not going to be easy to do. So that's why it's really important if you can use that technology that exists out there. CreditorWatch, for example, will keep an eye on all of your customers for you, and every day, if there's any sort of change that occurs to any of them, send you a nice, quick, clean email alert, which tells you that ABC Proprietary Limited has just gone into administration. Bang, put the stop on all goods and services. XYZ has just had a payment default against it for $5,000. Okay, well that's not a huge amount, but something definitely to be aware of. You might want to reduce their credit limit down, depending on what it is. The next one is react. So it's really important to react in the right way to those changes. So when they're brought to your attention, if you are monitoring, or if you hear about it via industry gossip, see an article in the paper, there's information, there's data out there everywhere. The important thing is to react accordingly to it. So if you do receive an email alert or you find out something negative has happened, respond to it immediately. Don't put it off. You could have a truck that's leaving the warehouse with tens of thousands of dollars worth of goods, or you could be about to make a delivery or do some work for them. What you need to be doing is checking in with the customer immediately, see how they react when you talk to them, ask them questions, find out, are they struggling, and then consider obviously revising the credit terms that you've offered them. It could mean that you actually go to them and you say, hey, we used to provide you with 30-day terms, but we're actually going to have to move you onto cash up front, cash on delivery. So don't just receive an alert or get a nice piece of information and not react to it. The next one we've got is recover. So this is really talking and looking at the debt collection side of it. Be sure to let slow and non-payers know that you take your debt seriously. Okay, so we've done the due diligence. They're using us. Now we need to collect the money. Or it turns out that they're a little bit slower than they should be, or they're avoiding phone calls, etc. You need to really let them know that you take your credit management seriously and you want to get paid on time and within terms. So a couple of little things that you can do. All CreditorWatch members get access to a membership logo that they can put on their invoices, statements, website, emails, etc., which is a really powerful tool to assist with getting paid on time. Excuse me. You imagine if you received 2 invoices that you had to pay, for example, one of them had a CreditorWatch logo on it and one of them didn't. They were both due at the same time, both for the same amount. It's pretty obvious which one you'd be paying first. It's the one with the CreditorWatch logo, because you know that they're using a bureau, they take their credit management seriously, and ultimately, they have the ability to register a default, which is the next point. What you also want to do is get a collection of debt collection tools, a suite of debt collection tools. And this comes back to those reminder letters, having a schedule around collecting that debt that starts with, a clearly labeled invoice, reminder notices at, say 7 and 14 days, whether they're email or phone calls, that sort of thing. What you can do is access a suite of tools in CreditorWatch, for example, and that has a whole suite of varying degrees of, I'll call them aggressive collection templates. So the first one's are gentle reminders. Please note that, this is now 14 or 30 days overdue. Please pay this as soon as possible. If there's any questions, give us a call. Please note that, we take these forms of payment. Then we've got, your more aggressive ones for when people are getting to that probably 45, 60 days overdue, avoiding phone calls, not returning phone calls, avoiding emails, making up excuses about why they haven't paid. That's when you get that sense, that gut feel that, hey, I don't really think these guys want to or can pay me. I need to do something a little bit more to get them to ultimately settle that debt. And that's where we've got the likes of a letter of demand, which basically would say, if this debt isn't paid by close of business tomorrow or close of business at the end of the week, we'll have no choice but to register a default against you on CreditorWatch. That's going to affect your credit rating going forward. It's also going to alert other suppliers that you're not paying your bills, and will commence a legal action. Okay, so you've got varying levels of strength and persistence with those varying templates that we make available. The last one here is register. So ultimately, you've tried everything to get payment. You've threatened to register a default. The next step is to actually register it. There's no point in threatening to do something if you're not going to follow through. Now, a default is a black mark that gets added to a debtor's credit report. What happens when you register that default is anyone else that is monitoring that particular company will receive an email alert saying that, so-and-so has registered a default against XYZ Proprietary Limited. It also means that anyone that looks at their credit profile, credit report in the future will also see that black mark as well. So more often than not, what happens is that debtor who hasn't paid their bill gets the default registered against them. They then have other suppliers contact them and say, we're moving you from, credit terms to cash on delivery, payment up front, or they stop doing business with them altogether. Or they get knocked back for credit in the future when someone runs a credit report on them. Registering a default's a really powerful tool to encourage people to pay their bills. Even if it doesn't get them to pay it now, the chances of them paying it in the future are a lot higher because that black mark stays with them for up to 5 years. Okay, so there are our 6 REs of credit management. So one last poll question here. I just wanted to ask, do you have a dedicated employee responsible for credit or accounts receivable within your business? Now, if you're the owner and you're responsible for that, just say no. I'm looking for someone who is outside of, generally the ownership of the business. Alrighty, thank you for that. So the good thing is here we can see that the vast majority are a yes. Most of them are full-time, which is great to see. Some is part-time, which is extremely normal within small and medium-sized businesses. And then some of you are a no as well. So thank you for that. Just know that, yeah, if it is a no, that is certainly not an uncommon occurrence, particularly in smaller businesses. As you grow and you have a bigger, debtors ledger, then it becomes a little bit more of not an issue, but more of a priority. The other thing that you can do is obviously outsource your collections to bookkeepers and or accountants as well. They often do a very good job, and there are other technologies out there other than CreditorWatch that can assist with automating, payment letters, payment requests, letters of demand, that sort of thing as well. So technology and automation is really coming along nicely. So you should be, at least having a look outside of what you're currently doing and investigating other tools, particularly if you use Xero or MYOB. There's quite a number of automated tools that connect to that. So let's have a quick look at a demonstration of CreditorWatch. I'm conscious of time. I know that people are either taking time off their lunch break or want to get back to work or actually go to lunch themselves. So I obviously won't do a really in-depth review here. I just want to give you a good understanding of what it is that CreditorWatch provides. So the first thing we want to do, as demonstrated in the 6 REs, is run a credit report. So what I'm going to do is put in a company that I'm familiar with, and I know that it's that top one. You could always hit search to see a list of search results, and straight away we're going to see this is the credit report on Denham Construction. So this top area are what we call widgets, and it's flagging straight away that these guys are a company that we don't want to do business with. They've got a terrible credit score. They're in external administration. They've got defaults, court actions, insolvency notices, mercantile inquiries. All of this negative data against them makes it really clear that this is not a company that we want to deal with. If you click on that, one of those widgets, for instance, the nice user experience created takes you straight down to that section to have a look at all the information. So scrolling down, nice big red risk box obviously flags again that these guys are in a spot of bother, so you're not going to miss it. Summary information coming through from ASIC and ABR, important things like ABN, ACN, registration dates, registration status, that sort of thing. Credit score, you can see 1 out of 850, definitely not someone you want to be dealing with. 12-month historical trend of the score as well shows you that they have probably been in administration for some time. We've got the court action information showing you the different courts, plaintiffs, and the amounts. They're the important things to look at there that have been lodged against this company over time. So you can see there's plenty of them there. The next one are payment defaults registered by CreditorWatch customers, showing you when it was added, when the invoice was actually due, who it was submitted by, the amount, and also the status. So you can see outstanding or has been part paid. The other status you would see there is settled. Insolvency notices. So this is showing you who the administrator is. In this case, you can go through and see all the contact details of the administrator, Hall Chadwick. Even got the administrator's name and contact details, which is great. Appointment details, when it's taking place, the meeting agenda, etc. If anyone's ever been through an administration, they'll know that having that information as soon as it happens is really important. Next one is mercantile inquiry. So this debt collection agency has been tasked with collecting from this company a couple of times over the years. Critical ASIC information. So that's typically documents associated with an administration. We can see that they were registered back in 99 and then went into administration in 2016. And then the ASIC information, so showing us who the director is, and we can see that the director's details, the director's history is quite checkered as well, with multiple adverse information against other companies that he's a director of. So by clicking on that, it just takes you through and shows you all of that information summarized into a table for you. And the last thing I'll show here is just the registered address. So you get a nice registered address come through, so you can confirm, exactly where they're located, both as a registered office and the principal place of business. Now, if you were monitoring this particular company, they were a customer of yours, all of these changes that we see, we would actually be receiving an email alert for, and that's what we can see here. So an email alert comes through once a day if any changes have occurred to the customers that you're monitoring, and it just summarizes the changes that have occurred. So we can see that there's a couple of ASIC insolvency notices that have been lodged, a commercial payment default, and also a court judgment as well. And it's really as simple as clicking on that link, and it takes you straight through to that credit profile, so you can get a little bit more information on this particular company. So we can see another company that's gone into administration, giving you a nice view. So if you're monitoring your customers, you can receive an email alert, and we're going to tell you that it's just a director change potentially, or an address change, or it could be as damaging as they've just entered external administration, or had court actions against them. But it's a really nice proactive way to find out about changes that could affect how they pay their bills much quicker than waiting for them to stop paying their bills. I'll just head back to the dashboard and have another quick look at a few other features included in your subscription that you get. So we have all the alerts that have come through over the last 30 days. So that's just an example of what you would get with your email alerts, but they're also available within CreditorWatch itself. A high risk list. So this is flagging all of the customers that I'm monitoring at the moment. Obviously, this is just a demo account. All of the customers that I'm monitoring at the moment, it'll come up in this high risk list. So it's a really good way to obviously do a bit of a data wash, get rid of some companies as customers because they're doing the wrong thing or they're not paying their bills, etc. Recent lookups, pretty self-explanatory. Defaults, so these are any defaults that I may have registered over time. And then the last thing that I'll touch on is Xero. So this is where I can actually connect my Xero account or MYOB, for example, and start to automate my credit management even further by getting automated credit reports every time I add a new customer to my Xero account, setting up monitoring in a much quicker way. You can do it without, obviously, Xero or MYOB. You can use CreditorWatch without those two accounting platforms. However, this just takes the automation to another level. And the last feature that we touched on of the three, so credit reports, monitoring alerts, and then your debt collection tools. So this is where you can start to generate letters that you would send off to your customers. So we've got a nice welcome new customer letter that you can generate, and then it starts to obviously get a little bit more serious. Reminder notice, final notice, letter of demand, and then we've just got standard 30, 60, and 90-day overdues. So they're actually really quite straightforward. You would just select letter of demand. I can select an existing customer, for instance, one that I've set up before, and then I'm just putting in the information that I have. So I've got the invoice number, goods, put in an invoice date a couple of months ago, when it was due, and $5,000. And I can add additional ones as well if necessary, if you've got multiple invoices that are outstanding. Next, when do you want this fully paid by? So this is where you kind of give them that last option. Hey, I want this paid by close of business tomorrow. I've got all my logos. I can add my signature to it, etc. Save and complete, and it actually generates a really nice clean PDF for me to send off to that particular customer. Now, obviously, we've got the CreditorWatch logo here. You would actually have your own logo. So Patrick's Meats, for instance, there's my fake company. And you've got everything here that tells them exactly how much they owe, when it's due, and what's going to happen if it's not paid. You can even add the various payment acceptance down the bottom, like EFT, BPay, etc. And then that all gets saved in your previous letters. So fairly straightforward on the live demonstration there. I don't want to go into that too much. And we'll just wrap it up here. So I just wanted to say thank you very much for attending today. Just a couple of things. If you are interested in CreditorWatch, click on the link there. We've got a free trial available. If not, you can email us or call us if you've got any questions. And we actually have a number of, we run a number of our own webinars as well. So feel free to visit our webinars page on our website and our blog for more information. I will hand back to James for him to say thank you and goodbye to everyone. But thanks from CreditorWatch and myself. Hope to see you again soon.
Well, thank you very much for joining us today, Patrick. I'm certain that all of our listeners can agree that you've provided some incredibly invaluable strategies and tools for creditor management. I guess laying the foundations for better credit management if they don't have any systems in place. Thank you everyone for tuning in, and have a great afternoon.